With a 500 million euro budget, it would be wonderful. I would look at Germany, the UK, and Scandinavia, Denmark, Norway, Sweden, we've done a lot of travel and we've created some relationships with owners in that area. The market seems to be very good. I would save 20% of that though, and I know the Southern Eurozone has had its ups and downs, and I believe it's coming back, but I'd save at least 20% of that for Spain.
Okay, good, interesting. Ralph?
Make it as a present for me, or I have to give it back?
It's a present.
You take it.
Yeah, and if you want, Ralph, you can leverage it to $1 billion if you need to.
I know how to do that. So anyhow, no, I mean, I guess I would go Germany for sure. I mean, if you talk about residential, there are some very interesting segments. Maybe a little bit, not this 30,000 feet approach. Maybe just buying into small asset type of, it's a very German approach to buy smaller assets, smaller house portfolios or whatever. I would definitely avoid these competitive auctions, because that is, I mean, this is now a lot of Chinese are coming into money. Everyone has his own story, but I guess this is not in line with my expectation for the future in creating value. In addition to, we see Spain as a very attractive market. It's not that interesting as most of the private equity houses thought, because you do not find these large portfolios, which they all like, which they want to reposition, and this is not what you see there, but you see a bunch of very interesting high-class developments, for instance, in Barcelona, in Madrid, because nothing has happened over the last 6 years in that sector, because you did not get any debt, so it was practically zero. So there's a huge demand in that, and Germany is definitely for us. It's Germany and Spain is what we would recommend.
Okay, great, Marcus.
I would say I would still definitely try to see where are opportunities, in the sense of where do you have portfolios that are not in a bidding process in a competitive auction, because that's most of the challenges. Then I was a fan of Ireland the last 2 years, and I'm still a little bit a fan of it, but I think the pricing is quite aggressive out there. So be careful what you're looking at. And in general, I would try to find a way possibly to really standardize building to get something for the market in the mid-level rental segment. In Germany, it will be between 8 and 10 euros, whatever. Trying to really target this market and possibly get a way to really standardize producing these kind of things, because that's a niche where you might be also able to source land and something from the local governmental side on conditions you're in a competitive way unable to access. Okay,
good. Thank you. Konstantin.
Yeah, I think from our perspective, what is very interesting, it's like the general shift in the socio-demographic, as we have like an increasing single households, lots of flexibility in the working spaces, and therefore I think it's all over in the kind of entire world. I would say like what is very interesting is like investing like into the metropolitan areas, investing in micro housing, student apartments, and that's sort of a niche market. And I think like especially for Germany, that's very interesting investment opportunity. And in this context, I would consider there's nobody around who has set up sort of a larger platform, combined it with a new technology. And I think that would be something which is really worth thinking of it and investing into it.
Okay, good. Tom?
Well, since I know the U.S. market a little bit better, that's where most of my money would go. But in talking in the U.S., the millennials are looking for ease. But living in the cities is very expensive, difficult for them to get in, especially if they're fresh out of college. So many of them are trying to live outside of the city, so your property's got to be on public transportation, and that's where I develop any opportunity. We're seeing it in the markets that we're in. Anywhere near public transportation is doing extremely well. I don't know a great deal yet. I'm still working on the European market, but Doug and I have had the opportunity to talk to different people at the UK. We're doing a presentation a month from now, and I think I would say opportunity there. What they have been very honest with us about is that they feel they're 20 to 25 years behind us in areas such as technology, professionalism, resident services, and things like that. So I think there's opportunity in that particular market if we go in and bring some of the products and services and things into the market, may be beneficial to do well in that particular market.
Okay, good, thank you. And I'll be at that presentation actually in London, so I look forward to seeing you there. Good, Jaap, yes.
Richard, first of all, thank you.
It's a pleasure.
Yeah. It's 500 million. It's not nothing. I'll take
It's
on.
500. It's 3 billion in total. I mean, it's quite a lot.
Exactly. You're a wealthy guy. So, given your wealth, you can take on some risks or add some leverage, because in this market we like to make quick decisions. If an opportunity is there, boom, finger on the trigger, get the deal done. I like to partner up, so I'll. If you're so kind, Douglas, we'll do the Nordics for a bit, but I'll split the amount in three ways. I will focus on gentrifying neighborhoods in a city. I like that, because they're mostly overlooked at first stages. And if you can get redevelopment there, as we do as a company, there are good returns to be made. The Nordics, indeed, is a pleasurable market. There could be good opportunities out there. Maybe in terms of demographics, it's a different story, actually. And although it's a residential session today, don't overlook high street retail. If all these cities are densifying and tourists are coming, like in the case of Amsterdam, spend some money on high street retail if you can. That's a good return to be made.
And thank you much to the panel for a very interesting discussion. Thank you.